Hi guys, it's Simon with Trade and Perform Coaching, and we're doing a trade review for, let's see, today was Tuesday the 14th. So a couple of things. I want to talk to you out of the gate about how I handle it when there are problems. So this morning, my life pretty much, as far as trading goes, massively sucked. I walked into my office and my power was completely down. Not only that, but I've recently changed offices and I don't have a backup units going right now. I had it before when I rearranged everything. I didn't bother to set up my backup units, so I was caught flat-footed. And additionally, I was out with some friends last night and didn't make it back to the office last night to set up my charts for the day. So I completely left myself unprepared. And even though I got to the office early to set up my charts, unable to do so because a lady decided to drive her car into a transformer, and that didn't work out for the office complex at all. So I was left without the ability to trade. Now, I was able to get back up and running by 10 a.m., but the first thing I do in my trading plan is if my computers are down, if my trade plan is not ready by the open, if I have not had time to get mentally set for the day and do a good job on the day, I stop trading, right? So I've always got to remind myself. So think about it. If you're trying to behave as if you are a professional trader, and if you are coming into this thing to trade it every day, you are acting as a professional trader, even if you haven't reached that milestone yet. First of all, pro athletes, right? If they show up and they miss the team meeting, they tend to get benched, right? Why? They're not prepared to play the game. If they don't show up to practices, they tend to get benched. Number one, I was not prepared for the day. There was nothing else to do but to bench myself. That was the right thing to do. Number two, even pro athletes, right? Starting pitchers, they don't play every single day. Um, Even if it wasn't pro pitchers, there's pretty much not a sport where they play every single day of the year except professional trading. And it takes just as much of a mental commitment and a physical commitment to do this well as I would say any sport. Perhaps not the physical side of it, but you have to take care of yourself physically so your brain and your body and your mind are in good shape and you can do a good job and you can handle the stress loads that come with trading. The next thing, even if I had been here, the market out of the gate uh, was pretty much driving straight up and not giving me my price action that I was looking for. So, had I been trading, let's talk about price action. This is a big topic for a lot of guys that I coach, and it's really hard. It's hard nuance for some reason for a lot of people. So, let's talk about price action for a second and see if I can kind of clarify that just a little bit. Let's get an empty chart here. So if we look over the last couple of days, how's the price action been going? And you'll notice each of these days, let's go back to the ninth, right? Starting on the ninth, let's see if I can get my drawing tool here. Okay. If we expand this just a little bit, here we go. Expand this just a little bit, and we get some motion here. The first thing that you'll notice is, look a couple of days ago, what was the size of the rotation out of the gate? Out of the gate, this is going back to the ninth, right? Just a couple of days ago. In the first hour, we had a range of 2067 to 2053. That's 14 points of range pretty much in the first hour, right? Let's compare that over the last couple of days and what that tells us. On the 10th, we went from we went from 14 points of range to less than 10 points of range on the 10th. Following day, we had a gap. All right, first thing you'll notice about the gap, there was no attempt to come in for half gap or gap fill. That should instantly tell you buyers are in control, right? You should want to take your fingers. Now, I know this when I was younger and I saw those gaps, and the first thing in my mind was, dude, there's no way this can keep going up. It's got to come back and fill the gap. It's got to fill in the unauctioned areas. And guess what? I was wrong the majority of the time. Wait for the market to prove to you that there's some sellers present, particularly when everyone's evaporated. Now, take a look. This is just 2 days ago at the first hour range. 2084 to 2090. This is 6 points, just over 6 points. What is the market telling you? We've gone from 15, 20 point first hour ranges to 6 point first hour ranges. So that tells me automatically There's less volatility. I'm going to get fewer good rotations. That there's going to be a grind that I'm going to have more patience to get than I would have just a couple of days ago to get the same number of points. And that even if I'm super patient, I'm not going to get the big moves that I had before. Also, there's something called recognizing the environment in which you make the most money. And I tell my coaching clients the same thing. Go back, pull up your most profitable days, and outline what did your P&L, what days did you have your most profitable days, and what was the rotation in the first hour? What were the counter rotations within that first hour? Meaning, how far did we swing back down if you were trading against the trend? How far did it swing back down, and how long did it take? When the market's moving fast, like it was back here, so here we can check this out. This was back on the 9th. Okay, market rotated down. It took basically from, let's just call this 840 down to 930 to move 16 points. Let's say you nailed the low at 2054, right, to the long side. It took from 930 till, let's call this 1015 to make an extension from 54 all the way up to 63, almost a 10-point rotation in essentially, what was it, 45 minutes, right? Look at that same 45 minutes here. 45 minutes, 9:30 to 10:15. This whole thing makes a round trip from short all the way back up from 2090. Here, we'll even expand this out. 2090 all the way down to 2086, whole 4 points, and then all the way back up. 4 points up and down in 45 minutes. Now, if you just came off a mental framework where you were killing it because we were getting 15-point rotations, now you're going to have to adjust. And you know what I found out is that I just don't trade slow, grindy markets all that well. Why I have to adjust? First of all, when I like pushing for bigger targets if I can, but now I have to be happy taking half. Secondly, my targets are regularly, when I take a trade, I'm trying to capture 50% of the average move. The average rotation in ES is 4 1/4 to 4 3/4, right? That means that if I am looking for a 2-point rotation, that I need at least a reliable 4 1/4 to 5 points of rotation relatively quickly to get out of that trade, right? If I can't get out of that trade quickly, I'm going to have to lower my expectations. So 4 points is the total rotation here. I'm going to have to start looking for 6 ticks as my initial scale. Why? I want a high odds scale to get out of the trade. Secondly, taking forever when you have leverage is a difficult mental thing to accomplish for almost anybody. So all I can say about that is you have to be able to look at where your best P&L comes from. Now, there are traders who trade this better, right? And they're patient and they're nice and slow. I know guys like that. And they really like it when the market starts grinding one way and they can just stay with it all day. And that's good. I got nothing against those guys. That just isn't me, and I know who I am as a trader, and I want to wait for the price environment that I recognize, right? And then lastly, this morning, when we came in today, so here's the first hour. The range is from 2091 to 2098. Within this, the biggest counter rotation I can find in that entire first hour, the biggest counter rotation I can find is right in here when we traded basically from 2097 to 2096, stretched all the way down to 2095 before coming right back up. 2 points of counter rotation. Even if I place that trade perfectly, I'm going to have to be an ace on the short side to get this done. Also, look at the open. We gapped down just a drop, right? Immediate move to fill the gap and then right through the gap, right? There's no weakness here whatsoever. Even though all of this is relatively poorly auctioned, there was no attempt. We could even push down to support at the bottom of structure right in here. So when you look at the market and you go, oh, first 5 minute we gap down, small gap down. First 5 minute bar is up, second 5 minute bar is up, third 5 minute bar is up. Almost no counter rotations in the first 15 minutes. That's when you have to slow down and you have to do 2 things at that point. First of all, you have to give yourself permission to realize you may not get any trading opportunities. The only, as far as I can see it, only low risk trade that you had here was long. Right there. That was low risk. Everything else, you added risk. You could have filled the gap, come in, pushed above the prior day's high, trapped in, pushed back down. There was all kinds of possibilities that were there. Also, this is essentially open drive higher, right? 1, 2, 3, 4 bars straight up. It was relatively small range, but buyers were clearly in control. What's the first thing that we would have wanted to see on the short side in order to have a clue that buyers were not in control? Let's make this bigger. Even without zones or anything else. There's prior day's high. The first thing you need to have is a trade below prior day's high. This simply did not occur, right? So here's the deal. Mentally, for the guy who goes, but it can't just go straight up, this kills him. This is just like, this is total BS. As a matter of fact, if you look on my StockTwits blog, you'll see where a guy wrote to me. I made some kind of smart comment about being short, and he replied to me. Let me see if I can find this here real quick. And he goes, I'm short from 2103, but this is what's killing this guy, okay? It's absolutely killing him. I don't know if it's killing him directly, but the mentality kills people. It says, this rally is BS and most likely won't sustain. Well, you'll forgive me for saying it, but what the hell is this rally is BS and most likely won't sustain? That guy's not a statistical trader. He's not looking for a pattern setup. He's looking at the rally. He's looking at what everyone is doing, and he's going, hey, this is BS. The market can't go up anymore, and he's single-handedly going to stop it, right? Look at what he's fighting. Come look at the volume profile that I posted earlier. We've had, these are consecutive days making new highs and not penetrating prior day's low. Let's count that off. Not making prior day's low here. New high, no new low. Day 1, day 2, day 3, day 4. We didn't even come close to even testing the prior day's low. We didn't get remotely close to it, right? That guy is trading an opinion, is all he's trading. And guess what? I hope one of two things for that guy, right? I hope he is either trading unleveraged, right? Or he's paper trading, or he's trading an ETF that's not leveraged, and he's trading a very small portion of his capital. Because guys, this market all the way up has been littered with guys, analysts, guys far smarter than me, who've called tops and who've just gotten their ass absolutely beat, okay? This rally is BS and most likely won't sustain is not a setup. What is a setup is when you're trading in the morning and you come back and you go, okay, here's prior day's high. We're trading above prior day's high. The first thing I want to see is trade below the prior day's low. What do I have at that point? If the market opens up, right, trades above prior day's high, comes back and closes back below, I at least have location to measure risk, right? If I just short here, where's my correct stop, right? Is it in space? Where is it? What is my, what's helping me, right? Furthermore, if you look here, there's something very basic called a trend line. I don't trade trend lines. I'm not a trend line trader, but I do use them for guidance, right? I treat them, as I always say, like white lines on a highway. They're not supposed to be crossed, but they do all the time. Here's a simple deal. Prior day, low to low. This has to get broken right there at 2090. That has to get broken in order to have a downside move. You don't like that one? No problem. We can get more aggressive on it. There. This trend line has to get broken before we can move. And this is a great example. Look at this. We break the trend line, and what does it do? Notice I didn't say if we break the trend line, we'll go down. We have to break the trend line to go down. Big difference, right? Trend line's broken. Now we can maybe go down, right? But remember, it's a line on a highway, right? People can crisscross it all day long if they want to. Doesn't hurt the car, doesn't do any damage, nothing happens, right? Okay. Just decides to follow it up to a new high, right? At which point, what do we have to see? Well, this was our old swing high for the day right here. I wanted to see the market trade underneath this level, this 2102, and I tweeted that. Here, let me show you my private Twitter stream. So we can see that. This was late in the day, and I made 2 points here late in the day. Let's see if I can find this. Okay, private Twitter stream. And I put out, I said, okay. I said, so I took a short, a very small short in binary options and the risk was about a quarter size of what I would normally trade in terms of risk, right? And I shorted the 2098 calls, but obviously went out at zero, right? Again, very small risk. And I wrote, this is 3 hours ago. It's currently 4:44, so that was about 1:45 p.m. And I put in 1:45, 2:45, 3:45, 4. That's right, 1:45 p.m. And I put nothing happens unless we get below 2102, right? And then I put as we moved on 3 hours ago, again, a little bit later, 2103.75 is now the line in the sand, up from 2102.75, right? That was the point that we needed to break to get a downside move. And if you look, that occurred right here. Now I have a proprietary trading signal that triggers the swing short. That started at 2102 and now moved up to 2103.75. And you can see once we traded below 2103.75, we started to get the down move. It was just too late in the day to get any kind of big extension. I was going to need it to really pour on from here and really come down, and it didn't happen again. I had the short signal, but the price action wasn't conducive. It's why I took such small risk on the trade. But the call itself was right? It got underneath, and had I taken the futures, I suppose I could have squeaked out a point. Not worth it for me in terms of the risk reward for taking a futures contract with that little movement that was going on. I was willing to take a long shot with the options. The point being, through the course of the day, two things. You didn't have to worry about the short till this trend line got broken. Even once the trend line got broken, it did not mean we were going to go down. It just means that it was set up to go down. I did not get a clear short signal till all the way till the end of the day. And even then, it really, truly did not work out, right? And importantly, the PA, the rotation size, I already knew I needed to cut the risk I was willing to take on the short side of the trade because the price action and the range was not going to be conducive to me getting paid, bottom line. So I always talk about clarity, commitment, and composure. Okay, so first of all, let's go this morning. I was clear. My computers were not working. Power was not on. I was not prepared to trade the open. I did not trade the open. I did not trade as soon as my computer came on. I recognize this is one of many, many, many days. Secondly, I saw that the market was up, slow and grindy. I didn't want to really take any trades in that environment, certainly not with futures. Why? It doesn't fit my trading style. Third, buyers are in control, right? I wanted to wait till we had a good extension before I took a trade. If you'll look, by the time we got up here, this is a move from 2092, essentially, all the way up to 2104, 12 points of extension. And I think that's a good place to start looking for risk for move to the downside. We just ran out of time on the clock. I got a feeling we'll probably come back in and fill back in down to 2096 overnight. I'm not certain of that, and I'm certainly not short overnight. But I have a feeling that we will kind of cross down and push down and maybe even gap down tomorrow. 2110 is the top of the current range. If we extend 2120 to 2125, would kind of be the equivalent of the stretches we made below 2170, right, before we trap back up. Until we trade below prior day's low, right? It does not mean that we have to close below prior day's low, but until we trade below it, right, because most likely we'll end up with something that looks like this, right? We trade below, that's the first clue that we'll have a change in the price behavior from what we are currently experiencing, right? I know that tomorrow on my checklist that if I am bearish, right, but the thing that's most important is that we are at least at a minimum trading below today's high, right? So if we trade up to 2110 and then we get under 2104 to 2106 and we hold there, that's my first requirement for being bearish. Or if we gap down and we're unable to get half gap or gap fill. My next requirement to really be bearish, right, is that we get below 2091.57. But guess what? We closed at 21.02. This is going to be a 10-point stretch down. It's hard for the market when it's slow and grindy to extend down more than 10 points, especially when we're in an up market and we push back up. And if you look, even if we get down there, I'm going to erase this for tomorrow. Even if we get down to this point, you're going to notice this is still the trend line from the gap and the higher low that we made from the first day where we gapped up into this 2084 region, right? Nothing about this tells me that there's any kind of downtrend going. Now, can we have news come out overnight and we gap down big time and it all starts tumbling? Yeah. But what will be the clues to that? Well, first we'll gap down, unable to get half gap, unable to get gap fill, have little to no counter rotations back up, and we'll have an open drive lower. It'll essentially be the opposite of this, right? Gap up, straight up, shallow moves back to the downside, slow, and then slow grinds here. Let's show you what it looked like when we broke down so that everyone can see it. And what that pattern looked like so you can identify it, okay? No breakdown, right? Gap down, gap fill, then it turned into a trend day down, right? Gap up, open drive lower. Again, being short is hard, right? Fills all the way back up. Still, gap up, fill the gap, push all the way up before finally driving down. Finally, we get our magical gap down, right? If you got bearish too quickly, you got run over on the push up. Again, determining the rotation size, ability to get half gap. This is really a good look, right? You go, oh, it's all over, we're going to gap down. Well, if you look, this was the gap down. We came in, we made an attempt to fill half gap. Here, I'll draw that out for you. We could not get half gap or even a 62 retrace, and then we rolled to the backside. And then importantly, we got below and held below the first hour low and were unable to penetrate back above. Okay, so in the room, we will go over these concepts every single day so that we know where we stand and what we're doing and what the market is communicating to us. The idea is to be slower to take the trade and be more certain that the price action is there that will reward your decision-making process. Once you know that you have the price action, do you have the setup? And then the last thing is focusing on the 1 to 2 good trades a day that'll pay you. And on the days where it doesn't pay you, you don't get the setup, you minimize your losses or you don't trade. Pretty simple. Anyone can succeed at trading, but you've got to have clarity, you got to have commitment, and you got to have composure so you can stay in a learning mode. It's where most retail, those 3 areas are where most retail traders fail, starting with they don't have a written trade plan. So at any rate, hope everyone had a great day. It is boring when it's slow and grindy like this. Don't force your hand. No one likes to draw down in this kind of environment, right? And the market, you'll know when the market comes back. Here will be a small clue. Look for an 8 to 10 point rotation in the first hour. That's your first clue that there'll really be some good money making opportunity in that trading day. And if it's a smaller range, put on your patient hat. Make sure you get the setup properly. Okay, guys, my name is Simon. I'm with Trade and Perform Coaching. If anyone would like to come and join us in the room, simply send me an email at tradeandperform@gmail.com. I'd be happy to extend a 2-week free trial to anyone who would like it. And if you're interested in one-on-one coaching, I'll just send me an email. We'll work on that. Booked up right now, but openings pop up every now and then. So anyways, hope everyone's doing great. Have a wonderful day. Go outside and enjoy the summer. And we'll see y'all tomorrow. Have a good night.